All right, let's see. All right, cool. So let's see. Not too much has happened since Saturday's talk. So I'm pretty much just gonna cover what happened over the past 2 days. All right. So let's see. All right. So we've already discussed this up here, right? Where we pretty much had the initial break of structure, right? We came back inefficiency there, created a new low, came back into the wick, created a new low, right? This does not matter to me, but it still fits the narrative, so it's just gonna leave it as that, right? But pretty much where we are, right, in terms of market open is right here. Okay, so right, when we're thinking continuation, we're thinking structure, we're thinking, right, nothing outside of that. So the first thing, right, ignoring today's price action, which is starts, you know, up here, right? I'm thinking continuation, right, off the bat from an intraday perspective, because we are still fairly bearish on overall direction, right? But we also acknowledge our higher time frame. So before I get to this, all right, let me state what these two lines are. So we're clearly still bullish, right, from a major intraday perspective, right? But what I'm highlighting here, right, is if we're looking at order flow, right, inside of here, right, this is essentially the low that created the final high. And as you can see, they took out a previous low here and a previous low there, right? So push up, retracement, push up, retracement, push up, retracement, push up, did not come back. Meaning this mitigation here, no matter where it is on whatever time frame, right, this is my invalidation point in terms of order flow, right? Which, as you can see, we have obviously seen a disruption now. So, all right, back to the price action in play, right? And I'm gonna tell you guys why I didn't trade this too, but hold on. Right, so we have our minor intraday continuations inside of the bearish leg, right? The bearish leg came back, we mitigated, right, up here, you can see there, without taking out the final leg down, or the preliminary leg here. Without taking that out, we created a new low inside of your minor intraday, right? We're low, high, break of structure, came back, right? And as you can see, this actually, two ways to look at this. You could see this wick here as a wick that either filled an inefficiency here, or it could have been seen as a liquidity grab there, right? So either way, right, we have a high and a new formed low, substantial new low, very valid low. But the issue here is I didn't really see this up here mitigate anything, right? Even though I was zooming in, I didn't see this mitigate anything, right? Actually, I stand corrected, right? As you can see here, there is an M2 wick there, right? Right after that, we see a pretty much a type of disruption there, and very a weird mitigation, I guess you could say, where it didn't even reach here. So in my opinion, we saw a disruption here and we saw a previous high here. So this is seen as liquidity because I don't see this mitigating anything. And if you want to get super technical, right, there is a wick there and it didn't tap. So this, to me, in my opinion, is just a type of liquidity grab to the downside, right? But keep in mind, in order for this leg to pull back, we need these initial structure breaks, right? So low, high, retracement, high, low, high, retracement, unwillingness, break of structure. So naturally, you would want to look here, right? Anywhere there, right? But when we look at EU, I'm going to show you guys why I didn't even look at charts because of this. But anyways, as you can see, we actually came back for a liquidity grab, right? That pretty much mitigated the 99% retracement here, right? But the thing is it is a 99% retracement based on this leg here. But, right, if you even want to reference a high-low retracement here, that's also very valid. And as you can see, it is in a premium, right? So very, very interesting price action. I didn't expect news to do that, right? But the important thing to note is that the mitigation here created a new low and it created disruption here, right? Based on this here, there's nothing left to mitigate here. So in my opinion, this is now a disruption of this entire final leg here, right? And if we take this structure point out, I'm positive that we'll take out this structure point out, and that is actually your H4, your major intraday leg there, right? So once that is taken out, right, we are now looking for actual retracements. This could even be seen as a potential turbulence point down the road, right? But our targets are here and our targets are here, right? So there's no real reason to feel rushed, right? In case you missed the move, because honestly, I'm not even in yet. And the cool thing is when we're so focused on this bigger picture, right, you're gonna get plenty of opportunity. So now the thing is where would we retrace to if we were to retrace? Right, so for me, off the bat, the reason why I'm looking at a structure continuation, for one, there's probably an SC somewhere here, maybe. Two, right, we've seen this happen before, where, right, we actually come back and have a structure continuation there, right? So it's very, very likely that we could maybe see the same thing again, but obviously we still need at the time of day to come into play, and we also still need excuse me, we still need those lower time frame confirmations. So right, when I'm looking at this, right, this is now for me 100% screaming sells, right? Because we've had that disruption here that correlates with the POI rejection that we saw here, right, which is a high low retracement. So naturally our best case is that we create a new low, right? And that is probably what's going to happen, right? Unless we have something stupid happen or we see some type of bullish break of structure here, right? Which is very unlikely in my opinion right now, right? But I'm trying to see what happens once we start reaching, right, into these deep levels inside of the range, right? Because even if we have that preliminary structure break here, it's very I wouldn't say likely, but it's possible to see a rejection and then break a structure, right? I'm not saying that will happen, but there is a chance that it can happen. I'm not favoring it. There's not necessarily anything, in my opinion, that's showing signs of that, but just be aware of both biases. Anyways, right, we can get back to EU now. Right, keep in mind what we talked about last week, where we came into the daily 50%, right, rejected it, and immediately pushed up higher again. That immediately shows to me that this POI is now invalid and the sell bias is not favorable, right? So as you can see, this was the rejection, right? And we came back, took a level of structure, meaning this is now a solidified high. This is a low high, right? Right after that, you see the pullback, came maybe into an efficiency, maybe an SC inside of here, and that created unwillingness. We did not take a previous low. Then we immediately created a new high. So, taking out all these lines, this bullish break of structure here now signifies low, high, retracement, continuation, right? So we are now bullish. Right, so the weird thing here for me right, is that we mitigated 1, 2, we actually mitigated in smaller time frames there too, 3, and maybe 4 times, right? So that it's weird to me, because if we come back down into these levels, there's a very good chance that it will not sustain itself, because that will now be seen as weak order flow. So I didn't consider this final touch to be weak order flow. One, because of what happened, when it happened, how it happened, right? We had that massive push down. We're going to cover that in a bit. But anyways, the thing is that it still mitigated something. And, right, if I was going to see this as weak order flow, right, I would have seen these 3 mitigations, right? And this wouldn't have happened. Because we had that bullish break of structure, that signified intent, that signified that you wanted to go higher, right? And based on consecutive higher lows, consecutive strong mitigations, right, that pretty much negated the weak order flow, right? And also, right, if we were still bearish, there might have been some type of SC inside of this H1 candle, because that is where the move came down. But as you can see, there's a ton of rejection, right, signifying weak bearish order flow. Okay, so even though we reached back down, right, this is still weak. This takes a lot of effort for this to come lower, right? Hence the decline in supply, and therefore generated this, even though it was because of a newest catalyst. So now, as we cover that, right, I'm pretty much going to tell you why I was very uninterested. So as you can see, right, because this created a new high here, retracement came pretty deep, came into a very deep retracement there, created a new high, right, low, high. So the thing is, for me, right, is, right, we see one POI, or a potential POI, inside of maybe a turbulence point here, because you can see there's an interruption in price, right? So as you can see, we came back into the zone, right? I want to see that's at M15, not fully sure. Okay, no, M10, yeah, somewhere here, right? So as you can see, there's a wick here, and there's an M15 candle there. So as you can see, we came back, we reacted, right, and then we came back, took the liquidity here, and now that could either be seen as a disruption, or that could be seen as an inefficiency fill. But the thing is I'm seeing it as an inefficiency fill. I'm always assuming that continuation, because we still have the low high retracement, because we took out the high here. So I'm bullish, but I'm also paying attention to what price is doing here on smaller time frame. Right, so this is that final push here, that rejection from the inefficiency, right, showed intent by wanting to show us a sign of strength. So as you can see, I don't remember exactly, I think this is M2, M1. Okay, yeah, so there is a small inefficiency here, right? So, right, this is, keep in mind, this is mid-London, right? So there is no trade here for me. As you can see, we came into an inefficiency move, right? We came up, created a bullish break of structure. It doesn't look like we mitigate anything here, but you can see there's 3 pushes, right? So in my opinion, this is showing bullishness, because if this was potentially a mitigation from up here, this would have been one push, and then we immediately react, right? But as we came back down, right, we came back into this bullish SC here, bullish SC, right, solidifies this as a low high retracement. We took out the preliminary level of structure there, right? But unfortunately, this move, right, came for a mitigation and immediately failed. So as soon as you take this out, right, this is now a bearish disruption, right? And because we took this out, this is now a low high retracement, unwillingness, break of structure. So we are now bearish. technically. So as I was watching this, right, keep in mind, let me note when New York Open is. Right, New York Open, right, I'm actually bearish because of the disruption, right? And I was aiming for this low here, right, as a TP1. I was actually looking for a potential play down here, right? And that's because this high created a new low based here, right? And then I was aiming to take out the overall low, which would then result in probably taking out these extra lows, and that would have been seen as weak order flow, right? But as you can see, right before we started coming into the POI, we see price give you that massive liquidity grab into, I believe it was at M15. Don't remember exactly. Yeah, M15 wick here. You could see the wick takes that liquidity and then continues higher. Came right directly into that wick, right? But as we're approaching my POI, right, I have to note what happens before it. So if we start zooming in, right, the only way I'm selling this, right, is if we don't take this low out. Because if we take this low out and then come to the POI, it's probably a liquidity grab. So as I'm seeing this, as the news event occurs, we come into the POI, we immediately reject, and we take out the preliminary level of structure. So this here is now promoting bullish order flow and a bullish liquidity grab, right? So that immediately invalidates my entire move, and that makes me 100% uninterested, right? So as you can see, immediately afterwards, you see the bullish run, right? Because we created a low high retracement inside of the original leg, right? So the only reason why it makes sense is because this bullish break of structure was initially shown here, taking out this previous high. So that signifies a structural range inside of a structural range. So because this happened, right, I am now back to being bullish, but I'm looking for a scenario. So right, as price continued higher, right, I actually thought this as a potential failed flag, right? And I also wanted to interpret this as maybe weak order flow. So because we had already cleared liquidity, right, and this final candle up was on diminishment, as you can see, it was still diminishing as it goes, right? I was actually looking for a type of reversal here, right? But I was acknowledging that it was a reversal, and I was only going to take the pro trend play if it was provided to me. So right, I actually saw this continuation BOS, right, as a sign of intent lower, because we had just given that essential liquidity grab here, right? We took out a previous high that actually has very high levels of volume, as you can see here, right? And I saw the diminishment there, right? So I actually sold right there, with my first target being here, and then from there you're obviously going to hold to see if it would maintain itself. But unfortunately that didn't work out. As you can see, that didn't work out, right? But then again, right, we are now having the decline, right? So now I'm telling myself I'm only going to take a position if price gives me an opportunity. So immediately after that, you saw it once again, right? You saw the bearish break of structure here, continuation BOS, right? And this time it actually worked out with my entry being there, my point of invalidation. Let me actually show you here. Point of invalidation being here, right? So pretty much the same level of, the same amount of stop in terms of pips, right? With my first target being the leg that created the high, and my second target being there, continuing lower, right? But we hit the initial target, we hit that partial mark, right? And technically, there would have even been a better entry, right, in terms of conservativeness, right, here, because we had the continuation BOS, then we had the unwillingness, and this scalp structural leg here. So theoretically, this would have been your conservative entry with your target 1 being there, right? So this continued lower, the partial was taken, right? But now that this liquidity here was taken, right, I'm also now looking for the hedge, right? So I actually saw this here, right? Our wick of interest, generate bullish disruption. Okay, so I'm now going to take a hedge position here, right? Because if we're following order flow, we see this large wick here, then we see indecision, right? Then we see an SC that creates the move up. So there's a potential chance that this SC has potential orders to mitigate. So as you can see, right, the SC was mitigated. We then broke structure and continued higher, right? Unfortunately for me, right, I actually put a limit here, and it didn't work out, right? It was already beyond my trading hours, so it was like whatever to me. So as you can see, we mitigated, right? Pretty much gave weak order flow here based on this weak order flow. 1, 2, 3, 4, 5, 6 taps before we gave a reaction, and we filled inefficiency to then continue higher, right? So there was 1 here and 2 there in terms of opportunities, right? So very, very sloppy. I don't know if this is gonna want to sustain itself, right? But now that I am full on bullish, right, especially because we've already given the disruption here, right? The preliminary leg, or the preliminary structural range of this leg, has now been taken out, signifying a potential disruption to the upside. So I'm curious now to see if this is going to want to give a dip, or if this is going to not sustain itself and, and give us a type of reversal. Because even though it is Asian session, we are seeing a decline in volume, and there is a massive peak in volume, right? This could exhaust itself over London, but we'll just have to see where we go from there, right? Keep in mind, there is liquidity sitting here. Liquidity is sitting there, so you just need a scenario to want to target those equal highs. All right, so other than that, I haven't looked at EG this week. Haven't looked at GU this week. Yeah, haven't messy. Even though this actually gave pretty much a perfect inefficiency fill there. Yeah, liquidity grab. This is super messy. Like if we're looking just at pretty much the current price action, right? If we're looking at structure, low high, retracement, unwillingness, break of structure, right here, lower high, unwillingness, potential liquidity grab, very messy. I don't want to play something like this just now, but it could be seen as a potential break of structure, and you could see higher movement based on the wick. So who knows? We'll see what happens over London, and then pretty much go from there. But anyways, let's see how many people are on today. 16. How's everybody doing with the new course stuff? Let's see. So many notes. Good. I hope you guys saw that we have like an objective under each video. Right, I hope everybody is following those objectives. I think those objectives are going to be key. But yeah, I mean, I'm probably gonna start adding stuff as I see. Who knows when that'll be. But yeah, if you guys notice, all of the new, I don't want to say they're new concepts because they're actually derived from the same stuff that we use. Like a turbulence point is just another way of reading a reaccumulation using SC and efficiency logic and mitigation logic, if you really think about it. What else? Right, point of invalidation, all that is that if this point breaks, then from a structural perspective, right, theoretically this should not continue unless you have another catalyst that brings it lower or brings it back to the direction it once was. Yeah, it's all the same. What's BRB and what's DBD? I don't know what that is. Just curious if you're... Oh, you want a signal from me, bro. You want a signal from me. I'll give me a second. You want a signal from me. Rally based rally. I don't know what that is, bro. I don't know what drop base drop is. I don't know what that is. Yeah, supply, okay, supply and demand. Yeah, I don't know what those are. I think I used to talk to this guy named Carter, and he used to use that stuff. I don't know if he still does. I haven't talked to him in a long time, but he used to use that stuff. Dylan, is that the Phyrexia guy? I don't the Phyrexia guy. I know if that is the Phyrexia guy, my friend actually told me about him a long time ago, and he's pretty much the creator of this, from what I know. Pretty much the creator of that. Oh, I thought you were talking about Phyrexia. Phyrexia created pretty much the false flag pattern. I wouldn't say he created it, but he popularized it. Durant Carter, yeah, Carter. Yeah, that's stuff that he used to use. Yeah, CFX. Let me see. Since Eisen wants a fucking signal from me. Right, so it just depends, okay? It depends. So the weird thing for me currently, let me see, I'm gonna take this off. The weird thing for me, I'm gonna take all my drawings off, right, is when I'm trying to think of continuation, right, I also have to play devil's advocate with what I'm trying to do. So we've already taken out a major, structure point here, a very major liquidity point here, right? So, right, a very linear approach would be to either, right, look for 50% in efficiency and continue higher, or from an order flow perspective, theoretically, this point here should not break. So if we were to start coming lower, that could be initial target 1 if we see a reversal, right? Because I'm honestly not looking for a continuation here. I'm not looking for that continuation. You're asking for a buy scenario in terms of a high premium, right? And this is still very fishy to me here. Oops. Did I take out my volume? So here's the thing, right? Outside of the news event, right? Disregarding the news event, this has been diminishing. That's a shitty image. Okay, so I'm automatically unattracted to whatever this is gonna do right now. Isn't what? And by the way, I don't like that you said that some other concept as a turbulence point, like I kind of take offense to that, so don't say that, please. So if you're asking me what would I do right now, well, for one, I'm going to wait for what London does, and I'm going to try to catch New York momentum. That's a little fishy of you asking me that, just saying. Anyways, right, I'm also wanting to see, I'm not trying to take this scenario because this, like I said, this could be seen as potential weak order flow, right? If we break this, because this could be a bearish disruption, right? And we would then be targeting potential weak order flow, and this would be the signal of maybe coming back to a turbulence point. You can send me that material though. I'm curious to see if it's actually a turbulence point. And if it is, then I'll tell you, and if it's not, I'll tell you the differences, if that's cool with you. So right now, I'm waiting in London to see if we're going to react from either whatever this is here, a 50% inefficiency, or I'm waiting to see if this is going to be seen as a bearish disruption and we continue lower and maybe start the pullback, right? Because there's obviously a chance of it coming to the turbulence point. There's also a chance of it coming back down to these these discounted levels. But yeah, we'll pretty much just go from there. Right, if you've ever really noticed, I don't mark out POIs and then pretty much see, I don't just mark out my POIs whether it's here or whether it's here. I don't do that until the morning. Because, for example, if I'm trying to make this a POI here, right, I don't want to incline myself to want to set a limit, because I also know that it can fail because this seems super overextended, right? In terms of overall volume, it is diminishing. So I'm more so wanting to see what direction this wants to take, right? Because even if you're looking at price action now, right, if this starts coming down and we see a disruption, right, then your scenario is technically wanting to sell from a short-term perspective, but that's not something I would take, obviously, right? But if we have that disruption, then you can now assume the pullback, right? And whether your POI is here, I'm not going to take the trade based on the POI. I'm going to take the trade if we see those signs of optimism and then want to take the position. I wouldn't say, I mean, what exactly is favoring sells? If you're saying everything is favoring sells, what exactly is favoring sells? Like, what did we talk about right now with our overall direction? Yeah, so the et cetera, what? That's two reasons. So like the volume, right, is one thing. That's only a sign of caution for me. That's never a sign of oh, I'm gonna switch my bias, right? Because if you have weak volume, right, all it takes is a small conversion and then it'll come back up, right? And this catalyst would be maybe a smaller time frame, a reversal or a mitigation plus, stuff like that. So volume is only for me a sign of caution. It's not something that's going to make me flip my bias. But in terms of overall direction, this is obviously shown that it wants to go higher. So it's not just a matter of wanting to get that that discount entry in my end. Yeah, but I'm very interested to see what happens pretty much over tonight, over tomorrow night. Because yeah, if we look at our daily, right, the volume is still strong on our daily. Right? So like I said, right, theoretically this is where liquidity is resting, right? But there's also the wick there, and there's also the 50% inefficiency, which is why I'm waiting to see, right, where we react from. Premium pricing of major intraday leg, yes, but it also depends what kind of trader you are. Like, if you're an intraday trader, that's not really something that should bother you. If you're a swing trader, then yes, now that's when you're becoming more alert because you're looking for, you know, longer positions. But yeah, do you guys have any questions? Let's see who's on the call. But yeah, Sahil, please send me that information, and I'll confirm to you if it actually is a turbulence point, because that kind of does bother me. Yeah, and I was actually gonna bring up one last thing. So do you guys remember? I think it was January when I first introduced the idea that I wanted to post the old course on YouTube.
Yeah.
Right. So I talked to. So there was only one person. I'm not gonna say who it was, but there was one person that actually gave me a good reason as to why I shouldn't. But everything that pretty much that he told me, because we talked yesterday, pretty much got negated with the fact that we have the new course, right? For one, I didn't charge you guys for it. Two, I think it's way better than the original stuff. I still kept it relatively, quote unquote, I don't want to say basic, but I kept it pretty broad to where you can still take any direction you want with it. But I still do want to upload the old course on YouTube, just for one, to take the leverage away from people that resell it, and two, right, even though it is like all over Telegram, it's over some websites, like you got to keep in mind that not every trader is on Telegram and not every trader is on these random websites. So if people see that old stuff and they like it, then they'll join the community, and if not, they're gonna see some value with it, at least in my opinion, just because it's a lot better than what's shown on a lot of YouTube courses. So I think it's a good move, right? I'm trying to kind of be selfless and also try to give more value, because it kind of gets hard with the free channel, trying not to make it unfair to you guys. So yeah, I hope I can do that. I'll probably do that if anybody wants to talk about that or bring it up, or even talk about it on Saturday Zoom, then you can DM me or you can speak up right now, because it's something that I'm open to. Because obviously at the end of the day, it was material that that a lot of you paid for, and I don't want to make it seem unfair. Hmm. Yeah, you also got to keep in mind that even though other people are teaching it, I have what's it called? I have shown it like over the Instagram page, and you guys know that people copy stuff from there all the time. Yeah, you'll have questions soon. Yeah, you can just text me whenever. It's cool. Or you can also send me journals whenever you want. Doesn't matter. I didn't want any last week, just because of the. I wanted you guys to go through the new stuff, but I mean, everything is welcome now. And I might start one-on-ones next week. I don't know yet. I have to see how I'm gonna structure it, and I also gotta pretty much. I'm gonna have to start blocking out my day, like the day before, so I can have everything prepared. But yeah. But I'm interested in seeing the whatever people are showing though, because that's not something I researched anywhere. That's literally just applying theory in terms of. Obviously, this is a bad illustration, but yeah, yeah, that's true. That's true. But I mean, you do know the history. All I really care for though is that you guys understand the logical side, not just the actual what the concept is, how to use it, blah blah blah. How so? Let's clear it up. Pips of Persia. Isn't that a an IML guy? I think he's a friend of WWA's as well. I've never let's see, I've never seen this. I don't think I've seen his stuff. Let's see. Pips. Yeah, his thumbnails look super annoying. Yeah, he seems like he's teaching IRR. Uh-huh. A three-part market structure. Advanced market structure part 1, part 2. Okay, I see that. Mm-hmm. Ah, okay. I see what you're talking about. Yeah, good for him. I'm not trying to seems like his channel's doing pretty well. Good for him. Ah, okay. Okay. Mm-hmm. Uh-huh. That's weird. Mm-hmm. Okay, cool, yeah. So it's not the exact same thing, but I see what you're saying. I see what you're saying. So I guess even though there was a pause, the move immediately after that, I guess, would be considered a quote unquote showing its hand. Yeah, okay. I see what you're saying now. Cool, good for him. Yeah, I know there's a lot of supply and demand traders out there. Oh, okay, I see. That's good. That's good. I see. Yeah, I guess that could be also how it's explained. And you also got to keep in mind, nobody on YouTube is going to show you everything they know. It's why I didn't pursue that YouTube route. One, it's a big investment in terms of I'm gonna have to find somebody to edit, um, thumbnails, stuff like that. And two, it's like it's so hard for me to teach in a way where I don't show everything I know. I think it's really hard. Yeah, it's so hard. Because like here's the thing, right? When it comes to teaching, teaching isn't just me coming on here pulling shit out of my ass and telling you guys this and this. Like I've actually taken a course on it. And like content creation is actually really hard. Like you got to know how to say it in a certain way, and it's something that I'm still working on, right? Um, but like whenever you compare it to something like maybe on YouTube or maybe another course or something, you can see a lot of inconsistencies, right? And that's usually not even my fault. It could just be my lack of, how do I say this? My lack of not being able to say exactly what's going on in my head. So like content creation is hard. But if you can figure it out, then, you know, you can multiply, you can replicate almost anything. Like the course that I'm taking on it is the visualized value course. I haven't finished it yet, but it's actually very interesting when it comes to using diagrams or using pictures to show what you're thinking or what you're trying to, you know, show the next person. Oh, bro, that must be awful. I have a lot of friends that are teachers. Yeah, no. Cringy thumbnails, yeah. I mean, you gotta grab people's attention somehow. Yeah, I understand that, yeah. Yeah, my little brother hasn't gone to class, and I don't even remember, to be honest. He has like 3 courses, bro. You're gonna have to go through his website. But I got it on a discount. Like, I got it on a discount, yeah. Oh, really? Yeah, man. Definitely, definitely. But yeah, I kind of forgot what we were talking about, so I think we were talking about YouTube. It screwed up a lot, but it also opened up a lot of opportunity. There's people that have made millions during this whole COVID thing. But yeah, do you guys have anything else you guys want to bring up? Or can we just end it off there? So yeah, if anybody has any comments on me putting the old course on YouTube, then please DM me, or if you want to wait for the Zoom call, then just tell me and I'll wait. But yeah, please let me know. I won't do it if there's like legitimate reason as to why I shouldn't. Yeah, bro, don't sweat these midweek calls, bro. If possible, just wait for the weekends. Like for example, if I was in your position, right, and it was 1 a.m. here my time, and it was you teaching at that time, right? I would wait for the morning, because if I was trading in let's say London, right, I would not be up right now. I would definitely be waking up early so I could train London and New York. But yeah, I mean, if I were you, don't sweat the midweek calls. I also have a habit of putting the Zooms right up as soon as I finish recording. Oh, really? Well, happy Ramadan, bro. Yeah, I guess it's time for you to backtest now until 4:30. But yeah, anyways, any questions, anybody? Cool. We'll end it off here. Cool. I'll see you guys on Saturday.